Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 64. I'm your host, Jacob Ayers. Today our guest is Lane Kawaoka. Lane is a city project engineer and a licensed professional engineer with a master's degree in civil engineering. Aside from his day job, Lane is the co-owner of MPFE Investments, focused on value-add multifamily apartments, where he currently owns 260 plus units. As a young working professional in corporate America and frustrated by the traditional wealth-building dogma, Lane was compelled to inspire and mentor other working professionals on how to do real estate investing and build their own portfolios. Today we're going to be discussing how to invest passively for working professionals. Without further ado, let's jump into today's interview. All right, today I welcome on the show Lane Kawaoka. Lane, thanks for joining us.
Hey, thanks for having me, Jacob.
Yeah, absolutely. It's our pleasure. So Lane, could you tell us a little bit about yourself and what kind of drew you to investing in real estate?
Well, chatting with you a little bit here, it sounds like you and I are exact carbon copies of each other in a way.
Hey, that's a pretty good compliment for myself.
But yeah, let me, maybe I'll start from the beginning. And I graduated from college about 10 years ago, did engineering, and I went to school working for a construction firm, and just following that linear path of go to school, study hard, get a good job so you can buy a primary residence, so you can work for the next 40 to 50 years and get a pension and all that nonsense, as we later learned. But then, I started to save my money because I was a pretty cheapskate back then. And, on my About Me page on my website, I have all these, I have this Google Doc that I'm trying to keep of all these weird ways I saved money, like washing my car in the rain and the cheapo latte from Starbucks. And I since kind of stopped that stuff, but it allowed me to buy my first primary residence. It's allowed me to save 80 grand in a few years out of college. And that bought me my first primary residence, which I thought was the holy grail of wealth building. But I was never home because I was traveling so much. You and I are probably kind of the same age. I started working about 2008. So I was just counting my lucky stars that I had a good job at that time. So then I was never home. I was only home on Saturday because I was traveling all the time, and it just didn't make any sense to have this big house all to myself. So I just decided to rent it out, called my old landlord up, and that was kind of the history. Things took off from there.
Yeah, Lane, it sounds like you experienced a path like many people do. Like you said, go to school, get a good education so you can get a good job. And like I preach a lot of times, that blueprint is good, but it only gets you to, like you found out, maybe your mid-20s, and then you're left looking, hey, what's next? So it sounds like you kind of gravitated towards real estate investing just by doing that, by living the American dream, buy your first property, and quickly realized that wasn't the best way to wealth building. So what clicked in your mind and what kind of changed and, led you to investing in real estate?
I'm one of those accidental landlords, and I know you and I both kind of help people get started, and it's, it's a lot of mindset stuff. And quite frankly, I didn't really have to do that. I did it by accident. So it's kind of, I got really lucky. I bought that first rental for $350,000, 80 grand down, and it was an A-class rental. It didn't meet the 1% rule, but it was a good timing in the market. It was 2009 in Seattle, of all places. And it was sort of cash flowing. My mortgage was $1,600. The rent that I brought in was $2,200. So for a young kid, that was a lot of beer money, that delta between there.
Yeah.
The rest is history, right? Then you just start devouring podcasts and reading books and networking with people and get more sophisticated. You actually start learning the difference between the rent to value ratio and cash flow and appreciation. And things kind of just took off from there.
Yeah, right. So like many, you kind of stumbled into being a landlord, bought your first house, decided you're going to rent it out. What did your next investments and next steps look like, Lane, when you kind of flipped that switch and decided, hey, I'm going to do this as an investment opportunity? What did your next deals look like? What did you transition into?
So that first one was an A-class rental, which we all know is not the place you want to be. In terms of A, B, C class, you kind of want to be in that sweet spot, which is the B minus class. And I kind of was realizing that. And again, this is Seattle, so very high-end market. I realized that I didn't have very much time on my hands, but I had a good job. And that formula kind of equates to buying the higher end rentals. So I focused my sights on just saving all my money because I was like, wow, this is cool, right? Like this is going to get me out of the rat race for sure. And, I tell a lot of people, just buy that first rental, just fumble through it because then you'll see, your spouse, people around you will start to believe and you'll believe, and then it'll just like turbocharge your savings. And that was exactly what happened to me. I saw how it was working. I was like, wow, I'm going to get another one of these things. So around 2011, I purchased a duplex in Seattle that, the numbers on that one were $250,000 and it rented for about $2,000. It was more of a B plus A minus class. So, I'm moving a little bit towards where I should be.
Right.
And the rent to value ratios were a little bit closer to that 1%. But shortly after that, 2012, that was when things really took off in the market and I wasn't able to make the numbers work. And I was like, well, is this investing thing over for me? And that's when I looked out of state and, went on Bigger Pockets, Googled out of state investing, turnkey investing. And I just went out and did it and bought one because at that point, that's like the shift I made, right? Like I realized the difference between appreciation and cash flow investing and an epic battle that's argued back and forth on those interwebs. And I was like,
Yeah.
my goal is to get passive streams of income, right? That I can eat the cash flow today. So I bought that first rental in Birmingham and that was proof of concept for me to do a 1031. So I essentially traded my 2 Seattle properties for 9 properties in Birmingham, Atlanta, Indianapolis. And a lot of lessons learned. I wrote like one of those articles on like 11 things you should think about before doing something crazy like that.
Yeah. Learning as you go for sure, right?
Right.
So Lane, what was it that made you decide to start focusing on cash flow, and how did you decide on those different markets? Because it can be kind of scary to invest for you across the country in these markets that you're probably not ultra familiar with. So how did you take that leap of faith and decide, hey, I'm going to start investing for cash flow and this is what it's going to take? It's got to be outside my current market.
Yeah, so I started networking with a little bit higher end investors, guys who are actually doing it. And I came up with this concept called the pyramid. In traditional wealth building, they tell you, hey, kid, like invest in these index funds. They're the most highest risk, high reward in the stock market because you've got time, right? Like you got 30, 40
exactly.
years. But I believe that's the complete opposite of what you should be doing. You should be going after the most conservative investments that are giving you cash flow and start building your cash flow up to a certain extent. I usually told my guys like about $3,000 is a good amount, plus or minus 20%. And you do this by getting passive streams of income, and rental properties is one way of doing this. And until you've built this pyramid of cash flow, you don't really move up to other more appreciation based investments until then you can start putting in like the fix and flips or development deals or land deals. I think the beginners, they all hear these high-end techniques like flipping, doing land deals, but that's what all the more sophisticated investors who have that base of the pyramid completed, they have that checkbox of that cash flow coming in where they don't have to worry about putting food on the table. And that's kind of been my what I've been preaching to my folks lately. And then to answer your other question, okay, so I'm going to go to these out of state cash flow markets, and there's probably about a dozen of them, and just kind of list it off the top of my head, like Memphis, Kansas City, Birmingham, Atlanta, Indianapolis, Ohio. There's about a dozen of them. Here's the thing, like you got to go to the secondary markets. I mean, primary markets are just overheated. These are the Seattles, the Los Angeles, San Francisco, Hawaii. Dallas is sort of becoming a primary market these days.
Yeah, it really is.
Yeah, these are the sexy places that everybody wants to live, and housing is always going to be expensive because it's in high demand. And I would also argue the second reason is there's a lot of unsophisticated money. There's just too many rich people. And this is pretty evident when, in 2012, when I was kind of making this pivot to the out-of-state properties. I was going to these auction briefings, before the auction, and they would give you like really cheap free spaghetti to entice you to come in the door. And it was a little sleazy. And like just looking around the room, it was just a bunch of like old Microsoft guys or tech guys. This is Seattle, right? And this is way back in 2012. And they didn't know what the heck they were doing. I was like, shoot, I don't want to bid against these guys who don't know what the heck they're doing. That has like
way more money than you do.
Right. Like you try and get away from the unsophisticated money, right? Like when everybody's betting on McGregor, you bet on Floyd Mayweather, right?
Yeah, right. Yeah, exactly. Well, Lane, what kind of advice would you have to a young professional like maybe yourself, say 5 years ago when you were looking at getting started? You've transitioned pretty well into developing passive income streams. And I think that's what a lot of people are looking to do, but just don't necessarily know how to start out, or maybe think like, it doesn't work in my market, and they're just too afraid to pull the trigger to look in other places. What kind of advice would you have to that type of person?
There's that old advice of invest where the numbers make sense, but live where you want. So that's the first thing when I talk to folks, figure out what they're doing for their job and where they live, because they just flat out might not have something in their backyard, right? If you're in San Francisco or Seattle, that's just not going to happen, buddy, right? Like in the seller's market. Yeah, it comes down to your highest and best use. You need to take in the self-awareness of your time, your money, and your knowledge. Some people have a lot of time on their hands and no job, no money. And those are the folks that go down the wholesaling route. And these are the active real estate people, because they just don't have the financial power to go after investments. Investing takes money to do. You may not have an investing problem. You may have a money problem in the end, and you got to figure that out. But if you're a young professional that's making some good income and you can save it and not just buy doodads, car or a big mortgage, you'll have that cash flow to save up. And it doesn't take much, maybe like $20,000, $30,000 to buy a first rental property. But that's how, like I said, the pyramid, it's buying those passive streams of income is the way to get started.
Yeah, and I think passive income streams are certainly underrated from people who are looking at getting started investing in real estate, because like you mentioned, there are more sophisticated methods of investing in real estate out there, flipping, land deals, investing in apartments, things like that. And you see these people making, huge sums of money, large checks on these flips, and you think, hey, I'm going to jump in and do that, overnight. And it doesn't really work that way. But what I think is important to talk to people who are maybe looking about getting into this space is the importance of passive income. And to me, that was always the number one priority when I was getting into this, because I wanted to be able to supplement and then eventually replace my earned income with passive income for a lot of reasons. But it would give me the freedom, most importantly, to do what I want, where I wanted, and when I wanted. So what has been your approach on looking for passive income versus like where you were initially kind of looking in those more of appreciating markets like Seattle?
First thing comes down is the rental value ratio. I mean, that's the first way of evaluating a market. Most of the secondary markets, they're going to have the second piece is the good, robust economy. Like just take it Detroit, for example. That's a secondary market for sure, but it doesn't really have that second piece of the robust economy. I might have today. I'm just not familiar with that area. I'm not going to be the first one to go in on something like that. But, the next thing you need to be looking for is the numbers, right? I mean, the brokers will always start off with, it's a 3-bedroom, 2-bath in a good neighborhood. I mean, I'm a numbers guy. Let's see what the numbers are first.
Yeah, right.
Let's sort it on a spreadsheet first. Then I'll ask on that 1% of the properties in that spreadsheet.
Yeah, right. You got to look at the numbers first before you know whether it's on a cul-de-sac or has a pitched roof or high ceilings or, whatever. I mean, that's all great, but if the numbers don't work, then you really don't care.
Right. I mean, none of the real estate brokers are engineers, but
probably have a few spreadsheets open on their browsers at all times than the typical engineer would.
Yeah. But hey, that's how it is, right? I mean, they're salespeople.
Yeah, very true. So Lane, how have you managed personally your investments out of state?
So it's sort of like, any other corporate job, I mean, a lot of times you're not going to have these guys right up next to you. You're going to have to keep them accountable via the phone and email. A lot of different techniques there, just keeping, being very firm, but, very fair. Always asking, okay, if you're going through a vacancy or a problem going on at your property, like, hey, what's your game plan, right? Like, I'm not going to tell you what to do. You're the expert. What are you planning on doing so I can keep you accountable? Oh, you're going to do this on Thursday. Oh, well, I'm going to call you on Friday. Make sure you did it.
Yeah, right.
Other things I do is these guys, there's usually a certain dollar amount where they're supposed to give you multiple bids. As I've kind of gone along and built better trust with these property managers, that of course you want to go through a property manager that you've gotten through a referral, not just gotten off the street or Yelp or something like that. You got to try and figure out, are these bids fair? Or are they just the quickest and way of getting something fixed? And that's what you want to determine. So always be checking, trying to give the invoices a look over. Is this fair and reasonable? Is this a good amount? One way I do that is I just try and think in my head, like, how many man hours is this going to take? And just sort of use like a multiplier of like $50 or $100 an hour. And then kind of just think, is this fair, or am I being gouged? Am I just being taken for another, stupid investor out of state who they think has a lot of money?
Yeah, right. Well, Lane, you've started investing in what kind of seems to be your own style of turnkey out-of-state investing. And what other kind of projects do you have going on? Are you just focusing solely on those two markets out of state, or are you starting to venture into new types of investments? Talk about kind of some of your current projects, if you will.
Yeah, so I kind of made a mistake of picking up all these sort of turnkey rentals. I'm not a fan of the turnkey rentals these days, especially in this seller's market. I mean, a lot of the providers you're buying them from are selling them well over retail. And, in a correction, it could be, you definitely are going to be underwater on these things. And yeah, you're buying it for cash flow, but I mean, you're underwater. I mean, don't listen to any of the brokers trying to sell you this stuff. Again, they're just salesmen. And it comes down to how much money do you save at the end of the year? For a lot of really high income individuals that are making are able to save more than $30,000 at the end of the year, I'd say single family homes is something you want to start out with for sure, but like definitely graduate to bigger and better things, multifamily or different syndications as a limited partner as soon as you can. I mean, I made the mistake where I got up to double digit properties. I got Fannie Mae'd out. Currently today you can get 10 properties and you can that's the limit. So what a lot of people do is they're buying 10 properties in their name, 10 in their spouse's name. But I'd argue that these single family homes, the people that I talk to, the investors I talk to, they all did that, and they all realized, they all saw the light that the single family home wasn't going to get them to where they were. I'm just do the math. Each single family home is only going to get you $250, $300, and at 10, 20 properties, I mean, that's not going to...
Yeah, it's only just starting to move the needle, at least for me there, so...
Right. And I know that sounds really spoiled and kind of, but these are the things that you see when you get up to that second rung of investors. I'm sure in the next year or two, Fannie Mae and Freddie, they'll allow us to get 20 or 50 properties in our name. And then all the providers and brokers will be jumping for joy because that's another way they can entice us to buy even more. But no, you got to make that switch. You got to scale up. And I know it's hard, but I'm 32. So I made the switch probably a couple years ago, and I didn't buy anything when I was, it was kind of embarrassing because I had this podcast just like you, Jacob, and I just wasn't buying anything for the first year or two. I was just kind of talking about stuff I had.
Yeah, right.
But, yeah, I mean, here in the last 3 months, me and my partner went out and got 626 units in a bunch of apartment deals. And I think we're off and moving now. I mean, we're definitely nowhere near where other people are, but we kind of switched over to a different gear. And I see it's very similar to playing in the major leagues as opposed to going and keep doing what you're doing in AAA ball, right? Like, you're not going to make your money and really start to scale until you get to the majors. I mean, at best, you can just go to the AAA All-Star game and maybe break an ankle and then your dream is over.
Well, Lane, let's not gloss over the fact that you mentioned you started transitioning into hundreds of apartment units with your partner, going from 8, 10, 12 turnkey properties. That's a pretty big transition. So can we drill down on exactly how that looked for you and what kind of process looked like?
Yeah, I mean, as weird as it sounds, it comes down to a decision. I decided that I was going to go to multifamily because I just figured out my age, right? And I was like, well, shoot, I've got a lot of time on this planet and I got to figure out what the heck I'm going to do. And I'm not going to just keep screwing around with these single family homes. So I'm going to kind of commit to this is the next thing I'm going to be doing for a while. And the other thing that really enticed me was this concept of the non-recourse loan. So in multifamily, Fannie Mae and Freddie Mac will, again, be your lenders on some of the larger loan sizes above $1 million. But they'll give you this component called the non-recourse. So like when you're buying your single family homes and in most loans, it has a recourse component where if you go underwater, you can't just walk away from it, or if something happens with the investment, you're personally liable for every single dollar that you took out as a loan.
Exactly.
But on a lot of these apartment deals that are bigger, and they have they're stabilized properties. So that means in a lot of markets, 90% occupied or more. A lot of those type of situations, you can fit in the box of Fannie Mae and Freddie Mac and get that non-recourse loan. And at first it kind of like befuddled me, because I was like, why are they giving these really sweet terms and these good non-recourse loans to all the rich investors? But think about, like, Fannie Mae and Freddie Mac are here to subsidize workforce housing, and this is what these investors are doing. So again, I moved to where the money's at. And that's originally why I went to real estate, is for these government subsidized loans. And these are the golden subsidized loans, in my opinion. So that was ultimately what pushed me over the edge. But I mean, to answer your question, it's just networking, getting in the right circles, because it's definitely hard. It's hard to get started.
Yeah, right, Lane. Well, it sounds like it really just came down to your risk profile and your risk tolerance. You identified that this reward might be greater and with less risk. So it sounds like that was maybe one of the driving factors to push you into the multifamily space.
Right. And I always try and look for, like, where is the least competition, right? Like, and that's why I moved away from investing in Seattle, because there was all these unsophisticated money, and a lot of it in Seattle was pushing prices up. So I moved out of state. But then, you start to realize the scenery, like a lot of mom and pop investors are investing in properties under $1 to $2 million. And you got to just get away from those folks, because it's just a dog world. And when you get up to the multifamily level, you kind of play above where the mom and pop investors play and below where the institutions play. So there's this nice little sweet spot there.
Yeah, absolutely. That's a good way to put it. And you're spot on with that. So great stuff. Well, Lane, you've certainly probably have not got to where you are without some people around you. So could you talk about what kind of team members you have on your side and have that structured?
I don't call them team members. They're mostly vendors. Obviously you got your lawyer, your CPA, your property management, your brokers. I mean, they're all interchangeable. I mean, and they're different in every state that I got them. But my true team is like the other investors that I networked with when I first got started, because these are the guys you're going to bounce ideas off of. Like, hey, have you used this guy in this state? Or how is your other properties in this state or from this guy? Like, these are the relationships that you're going to rely on to get started. And I wouldn't buy a property unless you get at least 3 or 4 disinterested opinions about the person. I mean, I have this the secret Facebook page that I have investors that I've kind of cultivated a group of people that are doing the thing and buying these out-of-state properties from California, Seattle. So, I mean, I've kind of created that ecosystem there for a lot of my folks. But you just got to get on, like, Bigger Pockets is a good way, and just start networking. And there's a lot of sharks on there. So you got to take the advice that you get and filter it. Where is it coming from, right? How's that person making money, right?
Yeah,
Are they just a truly benevolent investor, or are they trying to sell you something and just trying to pawn you off and CC you on email to pick up a quick referral check?
Well, that's the easiest way to spot whether somebody has your true interest in mind, is do they have something to sell, right? So,
right.
Well, Lane, what are your future goals? You're growing your portfolio tremendously. You're a young guy. You're out there crushing it. What are your future goals with real estate investing?
I mean, personally, just trying to pick up more and more units passively. And, I've got the website Simple Passive Cashflow, and, that's kind of why I got started in this, because, I was kind of misled. I lived this life of having to go to a job and stay there for 40 years. And what I see is, like, I've already helped out a bunch of people where, I've gotten them to buy their first rental and get into their syndication, and now their 5-year outlook has just totally changed, let alone 25, 30-year outlook. It means like a young couple, one spouse can stay at home with the kids or not even have to work. And the other doesn't have to go through life just in a big stormy cloud thinking that they have to do this forever, something that they don't like. I think that's been my main focus, I think.
Yeah, and a lot of people, Lane, just don't understand that this kind of lifestyle is available if they would just put a little effort and education towards it. I mean, most people just think like this is how life's supposed to be. You go to school, get a good education, get a good job, and retire from your 401k at age 65 and a half. And that's just how it is. And upgrade cars every 5 years. And people just never been told that other things are possible out there.
All right. I mean, it's kind of like the seeing the Matrix thing, right? Like, you want to take the blue pill, you want to take the red pill. I mean, some people are just totally happy taking the blue pill. And I don't try to pop people's paradigms because for a lot of people, it's sort of become that their job is who they are.
Yeah, very
But
much so.
if I realize one thing that people come to me and shoot me an email or, I do free calls with people, no agenda, but like I usually see like a huge pain point of like something happened to this guy. Like either they got fired or, some kind of off at politics, or they just see how unfulfilling their work is, and they kind of find someone like myself and someone like yourself. And, that's the whole thing, right? Like, it's not really about the real estate investing. It's about finding the people that resonate with you and finding your tribe. Because for a lot of us, the job and the rat races just does not work with us.
Yeah, right. And Lane, if I'm not mistaken, you still actually have a day job that you work at. So how have you balanced both your professional and we'll say personal or real estate investing life? I mean, it kind of seems like most people think you have to pick one or the other, but in fact, I've been able to do both, and I'd like to get your take on that.
Yeah, I mean, it comes down to your highest and best use, right? So for me right now, I mean, picking up a paycheck, that's sort of passive income in a way, right? Like, I went to school, studied hard, got a master's degree, and now I'm reaping the rewards of it right now. And I think the big switch that I made a few years back was I moved from a private company to more of a government entity where it's just a 40-hour work week. And, I go in, I do my thing, and then I leave, and it allows me to do what I do, with the podcast and website. But I tell people I've heard of this 12-hour rule, or what I could break it down to is, you've got 1 or 2 hours at the end of every single day. And you might even do like a chunk on the weekends. And you can choose to watch Netflix, go to the gym, screw off. I mean, there's choices in life, but you can spend that 1 to 2 hours a day, researching, networking with other folks. Take a nice walk during lunch in 30 minutes and call up another investor and just learn, right? Like, it's up to you, and something that you have to opt into, but it's not that hard. I mean, I spend 2 hours every day and a chunk on the weekend making a freaking podcast and doing all this stuff and investing on the side. Like, if I can do it, like, it's just about deciding and putting the steps in place and the systems.
Yeah, and one thing, Lane, that I found out when I was first starting out was how throughout your day, how many times you might have your headphones in listening to Pandora. Well, when I was in that phase, I wasn't listening to Pandora. I was listening to podcasts and audiobooks. And, your downtime or, your commute to and from work or at lunch or when you're doing mundane tasks or running or at the gym. So you can really capitalize on some downtime that you don't realize you have just by, like you said, using your best use of time.
I'm an industrial engineer, so one thing that geeky industrial engineers do is time studies, right? Like, we just sit there next to a employee and write down what they do every single second. But if I bet if I did that to you, I would see like so much like what I call it, like gray time. Like, you're not doing anything at work. You're not totally relaxing. You're just kind of existing, like floating around.
Yeah.
And I mean, I did this to myself. I had one of those construction cameras and I just filmed myself for a day because I was kind of bored. I just realized how much time I was just kind of doing like something, I don't know what the heck I was doing, nothing productive.
Right. Yeah. So, I mean, just understanding that there is some time in the day that you can carve out and set aside time and use that to grow and learn and further yourself, I think would be beneficial to the audience out there, just understanding that time does exist.
Right. I mean, the excuse of being busy, I mean, yeah, I get it. People are busy these days. But if you look at it, the most unsuccessful people are the people that use that excuse the most.
Oh, yeah.
So what's going on here? Is it systems, or is it just we're using it as an excuse? Is it the mindset part?
Yeah, very, very true, Lane. Well, Lane, what are your reasons why? Why are you doing all this? I mean, you could just be spending your time in gray time. So why are you out there doing what you're doing?
I think I found myself in a pretty unique position. I mean, starting my podcast about a couple of years ago, it's been pretty inspiring getting, emails here and there of, people who, they pick up my content and, they're kind of very similar backgrounds. And then, I'm sure you get these too. And it's pretty touching, right? Like it's kind of inspiring to actually be able to inspire people, and it just kind of keeps me going. And we're all trying to do the same thing here. We're all trying to divert money away from the Wall Street casino and into Main Street investments that actually do people good and, reward the hardworking people that are in the middle class that's shrinking. That's what I'm trying to fight here.
Yeah, absolutely, Lane. And like you've said, there's not another feeling out there that like knowing that you've helped somebody out and like having a proof of concept of that. Somebody reaching out and saying, hey, thanks for mentioning this or teaching me this or just getting me started along this path. It's really rewarding to hear those things. And that's another thing I like about real estate investing is there's a saying that says all ships rise in the same tide or something along those lines. That's how I feel about real estate investing is everyone is here to help everyone out. I mean, I'm not worried that, Lane, you're going to come to Houston, Texas and buy all of my properties and vice versa, or you're going to learn something that I don't know. It's everybody's like kind of in it together. There's a very group mentality with it.
Right. It's very abundance mindset as opposed to, hey, you're going to take my client or my property, right?
Yeah, right. Very much so. Well, Lane, it's been a great interview. As we're wrapping up here, we've got a series of lightning round questions, just a handful of questions we'd like to fire at you, and you just answer from the hip. How's that sound?
Sure.
All right, cool. Well, let's get started with it. The very first question we've got for you is, what was your biggest hurdle getting started investing in real estate, and how did you overcome it?
So I just kind of fell into it being an accidental landlord. But I think the hardest step for me was just to like decide and get proof of concept, because you hear all the stories of, real estate's the best way to build wealth. And you don't really understand it at first, but you just got to trust it. Just contact 3 to 5 investors and just hear their story, how they got started. The advice that they give you, how they did it might not be right, but the fact that they got started and look where it got them, I think that's what you need to look to.
Yeah, awesome. Well, Lane, do you have a personal habit that contributes to your success?
I'm a big habit guy, and I do morning rituals. I work off a list. I follow GTD methods, getting things done from David Allen is that book. Big habits, because if you can get things systematized, then it removes a lot of the cognitive willpower that you need to actually get stuff done that you need to, and not just say you're busy.
Yeah, right. Okay. Well, Lane, do you have an online resource that you find valuable?
I just Google things, right? I think that's the interesting thing about a lot of people that I meet. Like, they question things and they don't just say, well, that's hard, or, I don't know how to do that. No, these people, like, they Google that. Like, oh, how do I evict a tenant? Well, let me figure this out, right? Like, let's take life by the horns and let's figure this sucker out and trying to find other people who can do it, right? Google's probably the most invaluable thing, I think.
Yeah, great. Okay. Well, Lane, what book would you recommend to the listeners and why?
I'm not a fan of books too much.
Okay.
I mean, I read The Millionaire Investor by Gary Keller, but I think limit yourself to a few books. I mean, I've analyzed a lot of properties. At some point, it's about doing the thing, and as opposed to the mindset and learning, right? Because people use it as another excuse just to stay in academic mode forever.
Yeah, Lane, I'm certainly guilty of that myself. While I do take a lot of action, I spent a lot of time what I thought was doing good education, self-education before I ever pulled the trigger. And looking back, I wish I would have got started a little sooner now. I think there is a base level of education you need to get started in this game. But yeah, people do use it as a crutch to call it analysis paralysis, right? Like always studying, learning things, and never actually taking action. So, there's a fine line there, and it's a little different for everyone.
Yeah, I've heard of this concept called the 70-20-10 rule, where 10% is academic, like those are your books and a podcast. 20% is learning from a mentor, but the majority of it, 70%, is just doing the thing, getting there, screwing it up, buying that first rental that may have a 0.8 rent to value ratio, A class, and just totally getting it wrong, but you got started and you learned how to do it.
Yeah. Well, Lane, our last question here. If you were to give advice to your 20-year-old self to get started investing in real estate, what would it be?
I would tell myself, I didn't really make too many mistakes. I can look back and see, how I paid down my mortgage a little bit. That was a mistake. How I invested with the wrong person and lost 40 grand in my Roth IRA. That was a mistake. But for the most part, I started small and I kind of mitigated how much trouble I could get into. And I'm sure the things I'm doing today aren't the most optimized way, but like I said, you got to have the attitude that you're going to learn along the way, and that's part of the process, as opposed to using that excuse of you shouldn't get started. I mean, that's just like the podcast thing, right? Like, they tell us don't worry about getting it perfect because it won't be perfect, and that's how like most podcasters never get started. You just gotta get going and you'll learn it.
Yeah, definitely so. And I'm sure all the audience is out there laughing right now like, oh gosh, yeah, we've heard Jacob just sound like a total doofus or just mess things up. And yeah, you just got to get out there and take action and do things. And if you'll suck starting out, and eventually you'll suck less and less, and eventually you'll be okay at it. That's the way I approach things. And I think it's a really important perspective.
All right, just got to own the suck.
There you go. Yeah, I like it. Well, Lane, as we're wrapping up here, is there any parting piece of advice you'd like to leave with our audience?
I just say that, make sure that your strategy is aligned to what you're doing. I mean, I see a lot of guys that are making $200,000 or more as a household income, and they're doing like the wrong thing, like finding wholesale properties and flipping them, right? And for a lot of those guys, even single family homes is not the route they should be going on. So finding the people that are doing what you want to do and sort of in your situation. I think that's why a lot of us engineers kind of, hang out together, because we don't make the big salaries like a lot of these guys do, but we make a decent salary. So our strategy that we follow are usually the same way of going about this. And finding around those people, and, people want to come to my website, simplepassivecashflow.com, and sign up for the newsletter. Again, you'll get the free freebie, which is like, I get this big Google Drive that I just throw a whole bunch of useful stuff in, like spreadsheets and PDFs, and it's like a treasure trove. It changes all the time too, so if you guys want to keep checking back.
Yeah, okay. So if our audience goes to simplepassivecashflow.com and signs up for your newsletter, they'll have access to that Google Drive?
Yeah.
Okay, awesome. Yeah, well, we'll certainly link that in the show notes, Lane. Lane, where else can our audience find more about you if they have any questions or would like to reach out to you? Is simplepassivecashflow.com the best place?
Yeah, and just come, if you listen to podcasts, I'm on iTunes, Google Play, Simple Passive Cashflow, and I still take free calls, no agenda. I just like to talk with folks, and that scheduler's on my website. I don't tell people how to do it, and I do that kind of per design, right? Because if you can't figure that out, look, this real estate stuff isn't for you if you can't find a schedule link on a website.
Yeah, right. Well, I'm sure it's not very hard, and all of our audience out there will have no issues if they want to get a hold of you.
Yeah.
All right, Lane. Well, we certainly appreciate your time today. It's been a great interview. Thanks for coming on the show.
Cool. Thanks, Jacob.
Yeah, absolutely, Lane. Take care. All right, that wraps up our interview today with Lane Kawaoka. If you'd like to learn more about Lane, jump over to simplepassivecashflow.com, where you can learn more about Lane, his investment strategies, and check out the Simple Passive Cashflow podcast. I hope you're getting value out of this show. If you like what you heard today, let me know. Leave a rating and review on whichever platform you're listening on. As always, if you have any questions or comments, or want to hear something or someone specific on this show, reach out to me. You can contact me at www.jacobayers.com/contact, or connect with me on Facebook at The Real Estate Way to Wealth and Freedom. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.